Is copper the next Bitcoin? Some experts are saying yes. I'm going to explain this to you in 3 simple, fast steps. Step number 1, let's go over some shocking similarities in the charts. And before we get to that, who are these experts that are claiming copper is the next Bitcoin? And while I'm talking about copper being the next Bitcoin, we're referring to the price action. I want to be very clear. I'm not saying, or I don't think these experts are saying that copper is going to be the next global currency. Just in the most recent price action. So I read an article in Barron's making this claim, and expert commodity trader Tony Greer also made reference to this point in a recent podcast with Grant Williams and Stephanie Pomboy. So let's get back into the charts. We've got copper right here. We start 2009, go all the way to 2021. On the left, we go from $3,000 per ton up to $10,000. Bitcoin at the bottom is a more condensed time frame. We start at 2017, go to 2021. On the left, we go from $10,000 up to $60,000. So in 2009 with copper, we really see it going parabolic. We have a little bit of a pullback, but then it goes to its all-time high up around 2011. It comes all the way down and makes this complicated bottom, as they say. And in 2020, it starts going parabolic again. Let's compare this to Bitcoin. In 2017, we're humming along nicely there. On a more condensed chart, you could see this going up. But in 2000, or just before 2018, it really goes straight up. It hits a peak around $20,000 in 2018, very similar to what copper did in 2011. And then it comes crashing down, makes a complicated bottom that looks very similar to this copper chart. Then in 2020, it starts going parabolic. I believe that might have been during the halving period. My memory serves me right. But regardless, it gets back up to the same level at 20,000 that it saw in 2018, its previous high. And once it did, it never looked back. Goes straight up, almost with a little pullback here, up to 60,000, basically triples in price. So these charts, especially when you compare this time frame to the copper chart we have above, look very, very similar. In fact, shockingly similar. But the big question we have to answer now is, will copper triple in price from here like Bitcoin did back in 2020, moving into 2021? Step number 2, we looked at some charts that suggested copper may have a similar parabolic move in price to what we have seen recently with Bitcoin. But now, let's focus on the fundamentals. The first thing I want to point out is we have to not only consider the demand side of the equation, we also have to focus on the supply side. The reason I mention this first is because so many people I see in the comments of my videos make the mistake of only looking at the demand side, and they almost totally ignore the supply side of the equation when they're trying to figure out the long-term price move of a specific asset. Also, in today's environment, I want to point out, we not only have to answer economic questions, but we also have to answer political questions. I don't like it at all, but the reality of the world we live in is the politicians and their ability to create currency units and have the central banks monetize them has to play a role in our decision-making process when we're trying to analyze the probabilities. And lastly, when we're trying to figure out what's going to happen with copper or commodities as a whole, we have to get super specific and really think through what our long-term view of the dollar is, because a lot of times there's an inverse correlation between the two. We're going to get to that in this chart in a moment. But before we do, let's dive into the fundamentals of what's happening with copper right now. And to do that, let's go right to the internet. We start by going to snpglobal.com to get the view from analysts who specialize in copper. They say copper prices to rise in 2021. The highlights include copper to flip into a deficit. They're talking about the supply side there. And as far as the demand, Chinese stimulus will continue to support demand, and decarbonization will be bullish for the metal. Because as we move into an electrification of the economy, if you believe that's the direction we're going, in order to do that, we need a lot more copper than we have right now. A research analyst for Bank of America points out the cerveza sickness pandemic's impact on the global supply chain and logistics have resulted in year-on-year supply of the metal from Chile, which I believe is the largest producer of copper, and Peru to tighten. While we've factored in an increase in mine production and also of scrap this year, this is unlikely to be sufficient to prevent the copper market flipping into a deficit. In other words, we don't have enough supply to meet demand. And when they review the market appetite, they once again point to China, which I've read consumes over half the world's copper supply. So Chinese stimulus to support copper demand in combination with expected global economic recovery in 2021. And I know a lot of you watching this video right now are saying, yeah, economic recovery in quotes, but regardless of whether it's coming from structurally sound economic growth, which is what we would like to see, or directly from governments and central banks creating more currency units and injecting them into the real economy, this is still GDP growth, although it may only be nominal. And even if it is nominal GDP growth, it's going to be supporting that demand for copper, because most likely the way these governments are going to get that money, funny money, the fugazis, if you will.
Fugazi, it's a wazi, it's a woozy, it's a fairy dust. It doesn't exist. It's never landed. It is no matter. It's not on the elemental chart.
The dollars, the yuan into the real economy is through infrastructure spending. The more infrastructure you build, the more copper you need. And now they start talking about the supply side of copper. Two aspects that are also hindering supply are the lower grade and deeper deposits, as well as market appetite and availability of projects. Due to the cyclicality of the copper market, we have looked across the sector at mega projects currently greenlit by their board to get a sense of the downside price protection for copper. And I like to look at this in terms of real estate. You have to consider the cost of production, because if you can buy under the cost of production, you know that in order for more supply to hit the market to compete with the house you own, the prices have to go up. Or looking at it from another angle, if the prices go below the cost of construction, there won't be any additional supply hitting the market until those prices go up. Then the analyst points out, with a copper market in excess of 22 million MTCU, I'm not sure what that is, annually, only major projects have the ability to materially swing the needle on the supply-demand balance, or move the price of copper one way or the other. Based in part on capital costs, operating costs, and a minimum acceptable return on investment, we estimate that current major projects require a minimum price in excess of $3.20 per pound globally. So what they're saying is that $3.20 mark is your long-term cost of construction, if you will. And that kind of sets a floor at that level for the price of copper. Now they go back to the demand side, and this is what everyone is talking about right now. With all these governments moving towards sustainable energy, whether you think that's the smart thing to do or not, doesn't really matter. That's what they're doing, especially in the developed world. They say the expected increase in copper demand is also a result of the sustainable energy generation and consumption agenda, part of the green energy drive by governments. Of all the metals used in generation, transmission, storage, and consumption, copper remains the common denominator. Electricity generation, transmission, infrastructure, energy storage, and consumption all require copper. So we can see that the fundamentals back up what those experts were talking about in step number 1, that the price of copper could see an explosive move higher, very similar to what we saw with Bitcoin. But I want to point out, it might not just be copper that's the next Bitcoin. It could be the entire commodity space. Check out this infographic. A new super cycle. Why commodity prices are surging in 2021. Look at what is happening with the prices of oil, liquid natural gas, rice, iron ore, and what we've been talking about, copper. They're pretty much going directly up and to the right on these charts, especially when you look at liquid natural gas. Wow, I remember when I first started doing videos, everyone was bearish on natural gas. No one wanted to touch it with a 10-foot pole. Look at how things have changed. As a matter of fact, LNG is up over 727% in the last 8 months. So nat gas is Bitcoin. We don't even have to ask the question. Holy cow. In fact, it's probably gone up even more than Bitcoin over the last 8 months. Now let's go back to our chart. We start in January of 2020, go to December. And this is a chart of the commodity index versus the dollar. So the dollar's in green, commodity prices are in black. We go from 200 on the left up to 450. This is the commodity index. On the right is pretty much the DXY. We go from 85 up to 110. So we can see what happens when commodity prices just fall out of bed. This was during the cerveza sickness. The dollar goes up. But since then, the dollar is pretty much steadily gone straight down to where we are today, around 90, while commodity prices have gone straight up. So what we've seen in the past is this inverse correlation between commodity prices and the dollar. Therefore, if you have a view long-term that the governments are going to continue to print funny money, and it's going to override the banking system, it's going to override the Eurodollar system, then you must also believe that it's likely, the probabilities are high, that commodity prices will continue to go up over the long term. So the fundamentals are telling us there's a lot of tailwind for the price of copper. And I would assume most of you have a view that the dollar in the future is going to be going down because of all the politicians and the central bankers creating more and more funny money and injecting it into the economy through stimulus package after stimulus package after stimulus package. I think the stimulus package are going to continue to increase in size, and it's going to be just like QE, where we go from QE1 to now we're on QE infinity. We go back to 2020, maybe we started with stimulus 1, but I think by the time we get to 2025 or so, we're going to be on stimulus package infinity. And again, all of this would point to the commodity supercycle, including copper, continuing over the next decade, therefore prices continuing to explode higher. Very similar to what we've seen with Bitcoin. Step number 3, So the chart of copper looking very similar to Bitcoin implies that we could see a parabolic rise higher, and the fundamentals look very good for copper and commodities. So it begs the question, should you buy copper if you don't already own it? I mean, my goodness, if you look at steps 1 and 2, it would seem as though you should back up the Brinks truck and buy as much copper as you possibly can. But maybe not. Here's why I say that. I'm seeing a lot of hype right now around copper and commodities. Every single time you turn on financial news, it's not to the extent that they talk about crypto, but they're talking about the reflation trade. And all of these experts have gone from deflationists to inflationists. It seems as though maybe everyone is on one side of the boat with commodities and copper. I'm not saying that we're not in a long-term super cycle, but nothing goes up in a straight line. To give you an anecdotal story to back up what I'm talking about, I was on the internet yesterday exploring some websites, doing research actually for this video. And sure enough, almost every website I went to, it was showing me an ad to buy copper or for some sort of copper mining company or something to that effect. Editor, go ahead and throw up the ads so the viewers can see what I'm talking about. And I realize that Google is tracking me and there's cookies and all these things, but I've never seen an ad for copper when we were at the lows, let's say in 2020, or before that when we weren't in potentially a commodities super cycle where everyone wasn't talking about copper. See, it kind of feels like there's a lot of hype around commodities right now. And I've noticed not only a lot of people talking about it, but when you see your friend and family member Fred actually going out and maybe buying copper or buying commodities or asking you if he should, then you know it's time to take pause. And I've had a lot of friends asking me about commodities as well as cryptocurrency. So again, I'm not saying don't buy. I'm not saying that we're not in a commodity super cycle. I'm saying be cautious because we're definitely not at the absolute low in the cycle right now. And I think we need to remember what Jim Rogers has taught us. And that's that you have a long-term view. What's going to happen over the next 5 years and 10 years? But it doesn't necessarily mean that you immediately go out and take action based on your view. You wait. Remember what Jim always says, you wait until there's a big pile of money sitting in the corner, and then you go over and pick it up. But you have to be patient. And a lot of times, the best thing we can do as investors is nothing. But the catalyst to buy or sell is when we see panic and hysteria in the market. When we see panic, that's when we want to buy. That's when we get greedy. When we see hysteria, that's when we get cautious and we might even think about selling. To go into this further, let's go back to my recent interview with Jim Rogers himself. You like to find hysteria in the charts, I think is what, because he asked you if you trade or you invest specifically in fundamentals. And you said the only time that you look at charts is when you try to find hysteria. And he said, and you use the example of shorting gold. I think it was like $650 an ounce. And he said, well, shoot, it went up to 800 or whatever. And you said that you missed the top by about 4 days, something to that effect. And he's like, oh, well, how did you tell when to get in? And you said that you look at the charts and you look for when the charts gap up.
Yeah, chartists can tell you better than I can. Hysteria. basically, I think I said, I hope I said in that interview, you short hysteria and you buy panic. And you can see panic. You don't have to look at the charts. I mean, just turn on the internet and you can feel hysteria, and you can feel panic. You've been around enough to know what it sounds like and feels like. And gold, literally, we shorted gold at 675 and it went to 875, within a few days. It was not fun. I mean, we were sitting there like damn fools ourselves, But fortunately, we weren't smart enough to cover, and it collapsed quickly.
So if you believe we are in a commodity super cycle and copper is going to continue to go up like we've seen Bitcoin do in 2020 and 2021, but you understand that there is a little bit of hype and you are concerned that your friend and family member Fred is talking about the commodity super cycle as well, what do you do? What are the solutions? Well, I've got 3 that I can go over briefly in this video. First, you could wait for an opportunity when you see a little bit of panic in the market and then step in and buy. I've done 3 charts. These charts don't exist. They're just charts I've made up as an example. So we've got a very specific time frame. As you can see, we start off with now. We go to 2 years and then 5 years. So right now, let's say we're at close to the high in copper prices, but maybe we have a deflationary bust in asset prices. Who knows why? Look at what happened in March of 2020. And I understand most of you are saying, well, George, that's not going to happen because the Fed's just going to come in and buy, or the government's just going to create more stimulus packages or more deficit spending, and they're going to paper over the problem. Well, that may be true over the long run, but that doesn't mean that over the short term, maybe a month or two, you don't see the dollar spike higher out of fear and this panic. Therefore, commodities crash lower. Again, similar to what we saw during the cerveza sickness, March 2020. So you could have this long-term view and just sit on the sidelines and wait for a dip and opportunity, and then go ahead and ride it higher, but buy at a lower entry price when everyone isn't in this mode of hysteria, but they're in the mode of panic. The second option, which is something I'm going to be talking about in an interview next week with one of my favorites, Chris Cole with Artemis Capital, is something that he suggests in the Dragon portfolio. That is commodity trend following. Now, I'm not saying that this is something the average Joe and Jane should go out and do. I am saying if you have a little more time to commit to it, this is something you might want to consider. So basically, the way this works is through technical analysis. You would go ahead and start selling here and ride that down. And when the trend reverses, you start to buy again and hold until the trend reverses course. You sell and then you buy again. I don't want to get into the specifics as to how it works, but it's something that's not that complex if you have the time to allocate to it and really get your head around how it works. It's definitely not something for the average Joe and Jane if they don't have a certain level of sophistication. Now, taking it to the next level, and this is something maybe not for the pros, but you'd really have to give this some thought, and you'd have to study this to understand how it works. And you definitely wouldn't want to do this with money you need to buy groceries. That's for sure. So disposable income, money you can afford to lose. But a strategy that I've seen a lot of smart people put to work, including my good friend Lynn Alden, is selling puts to build a position around your long-term view. Here's how it works. So let's just say that commodity prices are going to continue to go up maybe for the next 6 months, the next year. So you would sell puts. What you're doing is you're saying, okay, I will agree to buy copper at a specific lower price. And the person who buys the put is going to pay you a premium. So in essence, what you're doing as the price is going up is you're just creating a source of cash flow through the puts you're selling. You continue to do that until we get to a point where the price really crashes. In fact, it crashes below the strike price or the price that you've agreed to buy copper. That's why you're getting paid for that insurance policy you're giving or selling to the person that owns the copper right now. But if your long-term view is that copper over the next 5 years, 2 years, 5 years, 10 years is going to go up, and we are in this commodity super cycle, if you agree to buy at $3 a pound, but the price goes to $2.50 a pound, what do you care if you believe the price is going to go up to $10 a pound over the long term? Plus, you've got the buffer of the cash flow you've made in the interim. So you create this cash flow, then when the price drops, if it does, then you buy, and then using a Bitcoin term, you hodl your copper or your commodity and just ride it out for the next decade. So is copper the next Bitcoin? The charts are shockingly similar. The fundamentals would say the probability is very, very high, but it doesn't mean that you should go out and buy right now. You need to be strategic about building a position. For more content that'll help you build wealth and thrive in a world of out-of-control central banks and big governments, check out this playlist right here, and I will see you on the next video.